everyone. It is Jenna Montiel here, and I'm super excited today to be talking about self-employed loans. This is for people that are entrepreneurs, um, pretty much don't get a W-2. So today we have Damon Blackwell
I'm Damon Blackwell, Senior Mortgage Advisor with the Streamline team at Cross Country Mortgage.
and Jonathan Jacobs.
I'm Jonathan Jacobs. I'm the president of the Streamline team at Cross Country Mortgage. Thank you for having us.
Oh, thank you. So let's start with the basics. What exactly is a 1099 loan program, and how is it different from a traditional program?
The 1099 program is strictly for 1099 not employees. Basically, 1099 is like an independent contractor. Unlike a W-2, they get a 1099 form from an employer or a client, and they traditionally pay their own taxes. They typically don't get benefits like you would if you're a W-2 wage earner.
Okay.
So self-employed, essentially.
I work with many self-employed professionals in Las Vegas. What are the key requirements that they need to know about applying for a 1099 loan program?
The 1099 loan program, what's really unique about it is we can look at either your most recent 2 years or 1 year of 1099s. Essentially what we do is we apply an expense factor of 10%. So to make sake of simplicity, let's say someone earned $100,000 last year on their 1099. We'll apply a 10% expense factor. They're going to have $90,000 in qualifying income to work with. We don't look at tax returns. We don't worry about what they've written off, et cetera. So really one advantage when it comes to self-employment.
Nice. Let's talk numbers. What kind of down payment should self-employed buyers expect to bring to the table?
The minimum can get away with as little as 10% down for the 1099 program. However, for self-employed, you can go as low as 3% for a first-time home buyer.
That's pretty nice. Everyone thinks it's more, and it's not, huh?
Right.
Well, one concern that I often hear from my clients is about documentation. Since they don't have a normal job, a W-2, it's, their income may vary. Um, they think that it may cause a challenge. So what paperwork do self-employed buyers need to have to be prepared?
I can answer that, Jenna. So 1099, right? So right now we're focusing specifically on the 1099 program, right? It's called a 1099 only program. And the reason is because we really only need their 1099. Obviously, they still need to have credit. They need to have other factors. But we can just utilize a 1099 instead of normally when we're looking at self-employed borrowers, we're looking at their taxes, right? Their tax returns. And obviously, a lot of self-employed borrowers write off a lot of their expenses, as many as they can usually to try to limit their tax liability, right? To lower how much they're going to pay in taxes. But unfortunately, what that does is it limits how much they qualify for, right? Because let's say in the example Damon gave, they made $100,000, but they wrote off $50,000. So on paper, they only make $50,000, right? Well, with this program, with the 1099 only, we can use 90% of their 1099 without looking at their taxes. So we don't need the taxes at all. We take their 1099, and now in the same scenario, they made $90,000, qualifying them obviously for a lot more, right? And so we look at the 1099. We're still going to look at bank statements. We're going to look at not pay stubs. We're going to look at assets. We're going to look at credit. We're going to look at everything we normally would look at, but it's for their income. We're only looking at the 1099.
Are there any specific advantages of 1099 loan programs for high income entrepreneurs looking to invest in luxury properties?
Yeah, absolutely. So one of the advantages is, first of all, normally we can go up to $3.5 million on the loan amount. Okay, so that's the loan amount. That's not the actual purchase price. So the purchase price would be the loan amount plus whatever money they're putting down. So we can go up to $3.5 million. But in a lot of instances, if there are compensating factors, so if a lot of the other factors are strong, credit, assets, and such, then we can get exceptions, and we really have no limit. So we can go up to a much higher loan amount. We don't get that many loan amounts that are above $3.5 million, right? But we can do them. So that's one big advantage. Another big advantage is kind of what I just mentioned before. It's, you have a lot of high net worth individuals usually have other businesses, right? And therefore they have more expenses. And usually when you have a high income, you really want to try to limit how much taxes you pay, right? And so you try to write off as much as possible. So with this program, once again, we can use 90% of just their 1099. Now we also have a P&L program. So for example, let's say that if they have a business where they don't receive a 1099, right? Let's say they own a shop, and in that shop, their customers obviously are not going to give them 1099s for whatever they buy from them or serve, whether it's a service or a product. And therefore, we can just use the P&Ls. So we have a P&L only program, we have a 1099 only program. And if there are, let's say, co-signers, right, then we can combine them. So we can use the 1099 for one, we can use the P&L for the other, or we can use 1099s for both, or whatever it may be. So we have a lot of flexibility. We really have what we call common sense underwriting. Underwriters are going to look at it and say, hey, look, does this make sense? Even though it doesn't fit within this box, right? Do we have a real explanation of why it doesn't fit within the box, and do we feel good with it? And if it's common sense, then we get, we'll make an exception, we'll grant an exception on it, and we'll get the loan to go through. And I will say, on average, on these types of programs, which are called non-QM, non-qualified mortgages, right? They're not traditional mortgages. On average, these programs get about 10% exceptions. With us, over 40% of our non-QM deals get exceptions on them, which means we have a lot of flexibility. We have real, truly common sense underwriting.
Yeah. That's really good.
Yeah, and one other thing, if I can add, with Cross Country's in-house non-QM products, we've developed these programs in-house. We fund them, we underwrite them, and we securitize them on the back end. So it really gives us competitive advantage with pricing. So our pricing on these products, it's really hard to beat. Sometimes it's in line with traditional lending, actually.
Yeah.
That's really good.
And not just the pricing. It's not just the pricing. We also, like Damon said, since they're our own products and we actually underwrite them and securitize them ourselves, we have a lot more control over it, right? A lot of times lenders will tell you, hey, we're direct lenders. We underwrite in-house, but they don't do the non-QM in-house, or they don't, because it's kind of a high risk product, if you will. And a lot of people will just broker their product out, right? So nothing wrong with brokering. We have the ability to broker ourselves as well. Nothing wrong with brokering, but you do lose control when you broker because you're not the actual lender on it. And therefore, things like making exceptions on them, pricing, because there's a higher risk when you're having a broker and there's different levels of different companies that need to be paid and so forth. Pricing is going to get worse. Control is going to lessen. So we do it in-house. Our pricing is very competitive, and we have control over it.
Wow. That's really good. That's like really good. I didn't even know we had some of that stuff. So that's good.
Yeah.
Well, now I do. What are some of the misconceptions that you see when it comes to, a 1099 program? Like, or do I have to, you've already said I don't have to put down 20%.
Sure. I think that's probably the number one. And not just with 1099 programs. I think with most programs, the biggest misconception is that people think they have to put 20% down. Right. So now, just to be clear, this is only if they want to use a 1099 only program, right? If they are just self-employed and they file their taxes, and their taxes, we don't need to use the 1099s only because there's enough income within the taxes. We'll just do a traditional conforming loan, or we can do a jumbo loan if they're a high net worth individual or they want to get a higher than normal than the limit for the conventional loans. But we can go down to as low as 3% down on those loans, right? On the 1099 only program, it's as little as 10% down. I think another misconception of the program is that normally when you're getting a self-employed loan, you have to have at least 2 years. A lot of lenders, you require 3 years of you being in business, of taxes, right, that they want to look at. And that's usually for conforming loans. But with us, with this program, we can go as little as 1 year.
That's unbelievable. No, seriously, like even as a seasoned agent, to hear that there's a program where you only have to have 1 year that's great.
Yeah.
That's great.
And the other thing with these products too, we can look at all occupancy types. So primary residences, second homes, investment properties, FICO's down to as low as 620. So it really does, as Jonathan was saying, it gives us a lot of flexibility and ability to reach a lot of borrowers out there who don't really fit in that traditional box elsewhere.
That's really good.
Yeah.
So can you guys share a success story?
Sure. I'll share one. We have a borrower right now who had been pre-qualified with a different lender, and I don't know why this lender was trying to do a conforming loan, but when they were at the last second, the loan fell through. They weren't able to do it, so they came to us to see if we could save the deal. And when we looked at it, it was pretty clear right away that there was absolutely no way that this person could qualify for this loan amount because their debt to income ratio, which is how much money they claim as income versus their debt. It was completely out of whack, right? If you're just looking at a traditional loan, they actually were claiming losses on their taxes. So we were able to do the 1099 only for him, and he was buying it along with his mother. And so his mother didn't get 1099; she was getting a P&L. I mean, she owns a nail shop, right, and a nail salon. So she obviously her clients aren't giving her 1099s; they just go in there and pay, right?
Right.
So with her, we were able to use the P&L program. With him, we use a 1099. We were combining their incomes. That way, they're able to qualify for the loan, and we just closed it last week. So obviously, they were happy. And because we did it all in house, right? Not only to my point earlier of having the control, we were to close it in 2.5 weeks, which is pretty unheard of, and especially for non-QM loans.
Excuse me. That's insane.
Yeah. I just recently closed a loan end of 2024. It was for an I-10 borrower, individual tax identification number. Basically, with our in-house products at CCM, with the non-QM products, it's ever evolving. They're always trying to find ways to improve them, make them better, make them more competitive. So we were going with our bank statement program, which is actually about 60% of the non-QM volume for cross-country. During this process, he qualified. There was no issues there, but during the process, they added the 1099 component to the I-10 aspect of the loan. And so in looking at it and looking at his most recent 10 years 1099, we got more income out of it. So essentially it helped us with pricing. So it was one of the easier loans I've done, actually, even compared to traditional lending. And it was a fantastic program because this guy had been shopping for 3 years, and I-10 can be very difficult to get done. And it was such a simple process. We were shopping this with other lenders, couldn't beat our pricing. The requirements kept changing with other lenders, like down payment, et cetera. This one was 15% down. More often than not, it's 20% or more with I-10. So really happy camper with that product, and got he and his family into the home. And they've been trying for 3 years. So stuff like that's so rewarding.
3 years?
Well, and just to be clear, I don't know how many I-10 borrowers you've done, or
None, to be
it,
honest.
that's usually the answer we get. It's incredibly challenging to get an I-10, usually, right? To get an I-10 borrower, which just means they don't have a social, right? They're just buying it with their tax identification number. And then on top of that, we were able to use the 1099 program, which is just crazy, frankly. We're super blessed to have these products, and our clients, like this gentleman, for 3 years he was trying and couldn't get it done. And unfortunately, he kept, being promised that people could do it, right? So
Right.
he kept going through the process, going through the ringer. Luckily for him, he didn't give up, and he ended up working with Damon. Damon did a great job and got it done. And I have one more success story.
I like it.
We have, this is a high net worth individual. Is actually a fighter, a UFC fighter, who is not a U.S. citizen. He's a foreign national, but he was buying a house here, worth several $1 million. He bought a home here. It went through us, and he didn't have a visa to live in the United States, but he was buying this house as a primary residence. So the challenge is, well, how are you going to buy a house in the United States? So you're going to live there when you don't have a visa that says you can live there,
Right.
right? And somehow we were able to get that through. We were able to get an exception on that one because he had compensating factors. And then on top of that, he didn't have a 1099. He didn't have a W-2. He had a international type of tax documentation. So there was a lot of there was a lot of compensating good factors, but there was also a lot of challenging factors. We were able to get that loan closed. That was a $3.2 million loan.
Wow.
And he closed on his house, and he's super happy. So, we can't close every scenario, right?
Right.
But I would say we can close the majority of scenarios as long as the compensating factors are there. And like I said, it's kind of common sense. Hey, well, this is why. We can give a real explanation of why a certain situation, and we can document something, right? In some cases, we don't have to document them as long as we give a good explanation for them. But these programs are amazing. And your clients should definitely take advantage of them.
I agree. You hear that? All right. So before we wrap up, do you have any advice to share with someone that's an entrepreneur or would like to participate in a loan program like this?
Absolutely. I'd say we're going to have our information out there. Get a hold of myself or get a hold of Jonathan, because again, we have so many different options to get people into housing. We have so many different programs, just like Jonathan was saying, with the exceptions that are granted. That's really, I'd say, industry leading, which that's huge. It's where you may hit a speed bump somewhere else, may not get your loan closed. More often than not, we can get it done. But, like Jonathan said, we can't get all of them done, but they have a really good chance, coming to see us and finding a product that's going to fit.
Yeah.
I'll add something to that. I would say get ahead of it, right? If you are thinking about buying, and we hear this a lot, well, I'm just starting the process. So I'm never going to buy for another 3, 4, 5, 6 months, and then, and I think most borrowers or most buyers kind of think, well, maybe I'll start the process a month before that. Especially if you're self-employed and, you do write off a lot of things, or you have a very, maybe you have multiple businesses and your income is not as simple as just, hey, here's my W-2. I would say, come see us as soon as possible, right? If you're thinking about, even, it doesn't matter how far it is, it's always better to have that plan in place. And if something is not, all the ducks aren't lined up, then we can say, hey, look, let's, we have to take care of this, we take care of that. And then, then you're ready whenever you are ready. But at least what we need to do to prepare yourself. The last thing you want to do is be in a situation where you do have to move for whatever the situation is. And then, it's like, well, we should have taken care of this 3 months ago, right? So I would say, come see us first, right? Let's put a plan in place, and then that way when you're ready, we can just execute that plan.
Yeah. No, that's really great advice. All right. I'm so sad. This is really good. Thank you both so much.
Thank you.
Thank you. So to everyone out there, if you're self-employed and you are needing to talk to someone, call my guys. We're a team, and we are absolutely here to help you answer any questions that you may have. So thank you, Damon.
Thank you.
Thank you, Jonathan.
Thank you.
And yeah, well, thank you. And until next time, see you all later.